sector spotlight are the similar patterns in the different sectors and outline the lower pivot and where potentially if we break and you're looking to get into that sector, where they can go. So one of the first ones I'll show you is retail, RTH. Retail right now also had a big move lower, okay? It is below all the moving averages. This is when it broke its neckline. You know, you have the low here of 94. If this were to break, just like the other indices, you could see it move down to 85. You better know on this retail group, around 85, if we start to cascade low over the next few weeks, that's the area. If we come in and hold, then you could look at some leading stocks in retail. So know that level, write it down if that's what you do. You know, the SMHs, which are the semis of tech, you know, a lot of them have clean balance sheets, so they might hold up a little bit better because there's not a lot of debt in some of them. If you look, they haven't been much stronger. They too broke below, you know, the key support, which hopefully you had as an out. And now they're going to be coming into some really, really big support, you know, around 24. So if this level were to break, I know if you put a little bit of money to work here, you did save yourself some pain, but we could still see a move all the way down to this 24 plus area. And if that's the case, once we get there, I would look at your Intel, which has a very low PE, they have a dividend, and they also, you know, have some decent prospects out there, and it's an institutional quality name. Then maybe look at a Broadcom, which has a higher level beta. But you're not going to need a basket, and we'll talk about that then. You know, as far as the industrials, they've been just obliterated. The industrials actually gave us a lot of clues that the Head and Shoulders top and the spiders were going to trigger because the home builders and the industrials led this move lower. So if you look here on the XLI, you know, it already is almost down to that support. So, you know, when this level broke first, that gave me some conviction to really start talking about the downside for all the indices. So now this has already, you know, met the measured move. Well, actually, you know, it's below it. And now I would look at this level here at around 27 on the industrials. And once we get there, maybe you start seeing some support in GE. Maybe you look at Caterpillar, you know, a little bit deeper. But at this particular point, if you're in tier 1 and you thought that this was a good level, okay, you know, you bought on the dip. But hopefully, again, tier 1, you don't want to be too involved yet. The market hasn't given us the signs yet that we're ready to go to the upside for more than an hour or so. Okay, and lastly, let's talk about the transports. You know, right now, these IYTs, they also, you know, help lead us lower. So those Dow theorists knew what they were talking about because it broke first. It's coming all the way down. It's coming into the same support. You know, it's actually closer than, you know, some of the other indices. So let's see how this handles, you know, the low 70 arena. So the moral of the story here is that a lot of these sectors all look the same. Some are acting a little bit better than others. You know, we've just had a big move off the highs, almost 20% off the highs. We're down over 10% for the year. I know everyone thinks that's a lot, you know, but from where we came from, you know, in 2009, we're up over 100%, and we've given back, you know, a small portion of it. And what's going on in Europe, what's going on with the slowness in our economy right now, what's the soft economic numbers, I would think that there still could be some more downside. Now, everyone wants to blame someone. Okay, I'm literally hearing all over the TV, oh, it's the machines. This is the same type of movement that we had back in 2008 and that I saw back during the internet, you know, flash crash, or that wasn't a flash crash, that was the bubble. So everyone wants someone to blame. I actually blame it on Washington. I blame it on the economy. I don't blame it on the machines. This is the action. This is the market. If we were back 20 years ago, they would blame it on the specialists. The only thing you could do is look at the action and trade it and handle your own financial future. I'll be back after this commercial break.